Good day, everyone. Trust we all are doing good. I'm Tio, and welcome to my day for the video of the 100 Days of Technical Analysis Challenge. So today, I'm looking at ERGBP. Let's get right into it. So like I always do in my videos, I try as much as possible to break down the bigger picture. Then before I deal with relevance in price. So what do we have on ERGBP? Real quick, we can see we had this impulsive move to the upside and this corrective move, this sideways move. What does that mean? This is a possible ICI, impulse correction and impulse. So let me mark that out real quick. So we had an impulse, then a sideways move correction. So we expect another impulse to the upside, which is just impulse correction, impulse. Now a correction can be in any pattern, but this is just a sideways correction. Now with this known, we can actually see that this is okay. Delete that. Okay, we can see that this is a massive range bound. Like price has been in a range for quite a long period of time, and we've been buying and selling at value highs and value low. So let's get into relevance, like I always do. Relevance in price. Now, my bias on ERGBP is to go long. To go long. I know most people will be wondering why, but here is it. At this area right here, we have an inverted head and shoulder pattern. I know most people won't figure that out, but this is the left shoulder, the head, and this is the right shoulder. So it's not picture perfect, but this is a head and shoulder pattern. Now, with that known, this is just a heads up like there's a huge tendency for price to move to the upside. And dealing with this relevance in price, we can see we have this high created, this higher low, then this higher high, and this higher low. So that's literally we are in an uptrend, right? Like this is literally an uptrend, a move to the upside. So we literally want to trade in alignment to this trend. Those are the factors like which are behind my bias to go long on this. And lastly, looking at this, we have this right here, a W pattern. So if you've been following my YouTube videos for quite a long period of time now, you notice like my approach towards trading is based off mostly M and W pattern. So let me do well to quickly explain the concept behind M and W patterns. So I said if a W pattern form, price would always come back to the neckline or a significant fib structure before projecting in the right direction. Same thing applies to the M pattern. If price forms an M pattern, price will come back for a retest at the neckline or a significant fib structure around that area before we project in the expected direction. So with that known, we can see this is AW pattern. So first, I would literally want to find out where the neckline is. So I'll switch to a line chart. And where is my neckline? The neckline is found at this area of structure right here. Yeah. So with that known, we can now dive further into price. So let me just make this align properly. Yes. So this is our net line. And now I can place my fibs. Where does the net line lie with the fibs? So we can see it lies between the 38.2 and the 50% fib level. And what do we have? Price rejected between this zone. Like price rejected between this zone. So this is a heads up, like there is a huge tendency we should be looking for price to project into the minus 27.2 fib level or the 61.8 fib level, the negative 61.8 fib level and the negative 27.2 fib level. So this is just a heads up. Now to the daily time frame now. Let's dive into the daily time frame. On the daily time frame, what do we have? We can see we are in an uptrend on the daily time frame. Let me get a channel marked out on this. Wow. Okay. Let's take this out and okay. So this is a channel. We have a channel marked out on this. So we do have a channel marked out on this, a upward channel, and we can see that previously when price was here, price acted as resistance, resistance, broke through. Now it's acting as support. Simple S and R flip. And also, if we do place a fib on this daily structure right here, this daily structure right here, swing low to swing high, we can see it aligns with the 50% fib level. The rejection occurred, the rejection occurred at the 50% fib level. So it's like confluence within a confluence. We had this impulse, correction, impulse. This is a correction. So we expect price to project to the upside. With this known, it's actually further confluence for us that there is a huge tendency of price moving to this minus 27.2 fib level or the minus 61.8 fib level. Brilliant. Yes. So to the 4 hour time frame now. On the 4 hour time frame, we can see that we have this right here. We have this CTL, a corrective trend line right here. So what would I be looking at? Price moved downward, created this massive impulsive candle and gave us a three-pin pattern. Now, I explained the concept of three-pin patterns yesterday in the video I did. If you don't understand the concept of three-pin pattern, please go and watch that video because I would not be explaining it here in this video again. So we had this massive movement of this bullish candle to the upside. It formed a three-pin pattern. So you literally expect price to come back to fill this gap before projecting to the upside. So I will be interested in buying EUR if it breaks this counter trend line. Only if it breaks this counter trend line will I be interested in buying EUR. So to the last time frame which I always check, which is the 1 hour time frame, this pattern here looks very familiar. Yes, this pattern looks very familiar. This should possibly be a bullish divergence. A bullish divergence. Yes, this is a bullish divergence. RSI. Yes, it is a bullish divergence. So the bullish divergence is just a pattern on the chart which gives us a heads up in possible change in direction of price. So I'll be looking to go long if this does break. Yes, if this area breaks right here, I'll be looking to go long. So my bias on EUR is a buy to the upside. Price movement to the upside. So that would be my bias on EUR. If you do have something different or in alignment or against mine, please do drop it down in the comments below. And also, please do like and follow. Thank you.